Well, good afternoon, everyone. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a great pleasure to be with you, and an even greater pleasure to be with our very special guest this afternoon, Danielle DiMartino Booth, the CEO and Chief Strategist for QI Research. Danielle, it's great to have you on the Jon Sanchez Show. How are we doing today?
I'm doing fabulous. How are you? And thank you for having me.
Oh, it is my absolute pleasure. Danielle, you are one of the most widely respected voices on Wall Street. Featured on CNBC, Bloomberg, Fox, everywhere. Our industry knows you. Matter of fact, my partner and I are diehard subscribers and viewers of your daily newsletter, the Daily Feather, the Market Report. It is just packed with great information, and I'll give some information later for our listeners to be able to subscribe. But Danielle, take just a moment, if you would, and tell the audience a little bit about your incredible background. My goodness, it's amazing.
So it's been kind of a winding road, I guess. I started off on Wall Street, and I got my second master's while I was working full time in a bank that was grounded in a deep history of high yield bonds and private equity before private equity was a thing. But I got my second master's after my MBA in finance at Columbia at night school in journalism, thinking that I would retire at a young age, which I sort of did. Uh, but I ended up being called back to the world of finance. Warren Buffett discovered my writings, and so did the Federal Reserve. And I ended up working as an advisor to Richard Fisher at the Dallas Fed throughout the financial crisis. When he retired, I retired in 2015, and I'm coming up on my 10-year anniversary, founding my own research boutique, QI Research. And as you have just said, and thank you very much, we publish the Daily Feather every day, and we've got a good number of institutional clients who get even more information from me. We publish
Yes.
8 times a week.
Amazing. You have built an incredible team at QI Research. Tell the audience a little bit about the team's background, because not only your time at the Federal Reserve and on Wall Street, but you have an incredible team that has a vast array of experiences and market knowledge.
Yes, combined, kind of my chief analyst and I have about 50 years of experience in the markets and in finance. But I will say some of my biggest props go to my graphics and my editing department. So I take great pride in the fact that we have a very low typo record. For whatever reason, I'm a stickler for perfection,
Yes.
and so the thankless portion of my team actually makes sure that we put out, I think, some of the most outstanding work on the street. And
Yes.
they've been doing what they do forever and ever. And if I had to say anything about my team, very few people ever ask me about this. It's dedication. They're
Yes.
all truly dedicated to the brand and to providing excellence and differentiation. So that's the one thing that we hope we never do, and that's be echoed in any way by any other research firm.
You know what I love about the Daily Feather, Danielle, is it's right to the point. And for those of us in the industry, we cherish that, right? Our time is so very valuable. You get right to the point. You touch on so many different areas. You got incredible graphics. How do you do it every single day?
Well, the world is an interesting place, and we pride ourselves on finding the Equipment Leasing Association, different kinds of construction metrics.
Right.
I've always found, and I found this when I was at the Fed, I found this when I was on Wall Street, that it is kind of I won't even call it the B team. It's the data that is not necessarily the sell side's go-to, where I
Mm-hmm.
find the deepest, richest stores of data that tend to be much more leading in nature. And there's always an abundance of data and fresh information out there. And the beauty is that we don't just cover the United States, we cover the world.
Well, I'll tell you from a reader's perspective and a broker's perspective, what I, again, one of the many things I thoroughly enjoy about it is you're finding the little bit of nuggets that are out there outside the scope of our traditional Wall Street weekly, daily reports that we get, and also reports from one of your favorite sources. I say that tongue in cheek, of course, and that is the Federal Reserve, which we're going to go into great detail about here momentarily. So, again, kudos to you and the team. It is an incredible piece of knowledge that we get each and every day. And like you said, there's the institutional side called the Weekly Quill, and then, of course, the Daily Feather. So, again, I'll give some information later of how our audience can subscribe to that. So I just wanted to start the interview off by saying congratulations.
Well,
I see.
thank you.
Yes, absolutely. Okay, what an incredible time to have you on. We obviously, um, are going through massive, massive amounts of volatility and fluctuations in the market. What do you see going on, Danielle, with this market volatility? And again, it's primarily attributed to the tariffs. So let's get your perspective on volatility slash the tariffs.
So I see actually the absence of volatility in the extreme moves that we're seeing in the market. I'm seeing an acute paralysis.
Good term. Good term.
And I say that because investors are just petrified. They
Yes.
don't know what's happening next. They don't know what's happening in the next 2 minutes. They don't know who's on the team. They
Hmm.
don't know who might be kicked off the team. They don't know if the people on the team are necessarily going for the same goals. So I think investors are deeply, it's not confused is uncertain is too light of a term. I would say investors are deeply confused, and that's why we see such binary um, such binary reactions in markets. Either the Dow's up 1,000 or down 1,000.
Right.
Neither of those types of days in the market are reassuring. And we've come off such a long period of time where there's been a complete absence of volatility. Everybody's just been on the same page. Market go up. Doesn't
Mag
matter
7, everything
what's
run.
in the market. Market go up.
Hmm.
And it didn't matter even what was in the fundamental analysis. And
Hmm.
now we're seeing the opposite of that. We're seeing market go down, and on a day when maybe there is uplifting
Hmm.
potentially news, and on a day like today we're seeing market go way up
Hmm.
when the data that came out this morning was absolutely a bloodbath. So there's no rhyme, there's no reason, and I think with good reason that a lot of investors right now are simply paralyzed.
Absolutely. And I want to clarify to the audience. I love that term, and I've said the same thing on the show, Danielle. And that is, I think it's not only the institutional investor, it's the retail investor, it's everybody. And I want to follow up on another one of your great points, and that is the data doesn't make sense. We'll use today as an example, right? We get comments out of the Treasury Secretary, oh, we're making okay progress with China. And like you said, the market rallies 1,016 points on the Dow side of things. So many days we get information that you and I, I've been doing this for 36 years. You've been doing it for almost as long as that, if not longer. And we're trained, of course, certain bits of data should react, either positively or negatively in the market. And sometimes you get just the opposite. Sometimes I start to think, well, okay, common sense says to do this, go long. In reality, we should have gone short, in an example. So, yeah, it is a very, very confusing time. And do you think that the primary reason for, I love this term, acute paralysis that we're seeing, Danielle, is really attributed to lack of clarity out of the Trump administration? What do they really want with the tariffs, the trade deficits, et cetera?
Well, I think that is certainly at root of what's going on. I think what we're also kind of experiencing right now is this isn't what we were promised. And
Yes.
when I say we, I mean we the people. I actually publicly tweeted out on Easter Sunday that I wrote in a vote for Jesus. So I'm not speaking for me as a voter for either of the two candidates, because I figure my guy always wins, as in Jesus.
Hmm.
But and I'm not a Bible thumper or anything. I just figured I'd just go with the good guys.
Hmm. Hmm.
But it's certainly not what people. It's not where voters' focus was. Voters' focus was on the border, and that certainly has been secured.
Hmm.
But in a million years, the farmers who are, and who are contemplating bankruptcy, the small business owners right now who they've only got a matter of weeks to survive
Hmm.
before going bankrupt. This isn't what any of them expected.
Yeah, that's right.
And I think that is, it's not that we don't necessarily understand and appreciate that China is our economic and therefore sovereign enemy.
Mhm.
It's that we don't know necessarily that we're even going after our enemy. So it's an extremely confusing backdrop. And I think the messaging has been abysmal. And I think that's why investors and business people are rightly confused. Right now, you've got the biggest investors who are whipsawing the markets because they're positioned in a certain way. And at the same time, you've got the biggest corporations that have the deepest lobbying budgets that appear to be the ones who are going to make out with carve outs.
Hmm.
That's, again, not what was promised.
Right. Right. It's like you've listened to my radio show, Danielle. This is exactly what we talk about every day. It's not what we've been promised. Well, also, another area that we're going to transition to when we come back from this break is you have been one of the most outspoken critics of the Federal Reserve. And we want to find out, and I find it ironic, again, that you spent 9 years at the Dallas Fed. And you're a very well-known critic of our current Fed. So we're going to move into the Federal Reserve topic in just a moment. Our very special guest this afternoon, Danielle DiMartino Booth. And, of course, she is the CEO and the Chief Strategist for QI Research. Let's turn it over to Kristen Snow in the Right Now Traffic Center. Kristen. All right. We'll pause right there. Great. All righty. So this next one is going to be 6 minutes. You are doing absolutely excellent. All right. 5, 4, 3, 2, 1. Welcome back to the John Sanchez Show on News Talk 780 KOH. We've been joined by our very special guest this afternoon, Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. Danielle, let's move into the next topic, which again is a topic that is obviously among the tariff situation and things coming out of the Trump administration. It is the Federal Reserve. Just yesterday, of course, on April the 21st, the president indicated that the chairman of the Federal Reserve is a loser and he wants him gone. And of course, Wall Street and the legal world is trying to figure out if he really can do this. Tell us why you've been one of the most outspoken critics of the Federal Reserve, and if you think President Trump is correct in wanting to oust Jerome Powell.
So, first of all, no, I do not. I do not think that that somebody who was confirmed by 85 senators should be susceptible to being ousted by a president. The Federal Reserve was created in the aftermath of the 1907 Great Financial Crisis, which in many ways was worse than the Great Depression and was by design an apolitical, nonpartisan institution. My criticism of the Fed over the years is that really since Paul Volcker left as leader of the Fed, that the Fed has become more and more politicized and that it's suffered a tremendous amount of mission creep, whether that be climate change or a central bank digital currency, being places where a central bank does not belong. I think that broadening the Fed's mandate from minimizing inflation to maximizing employment was the wrong thing to do in the late 1970s. The two mandates inherently conflict with one another. And so I have advocated for, in the last chapter of the book that I wrote, Fed Up, provides kind of a blueprint for how to rip the Fed down to the studs and rebuild it from the ground up, but not have a central bank. We are a developed country. We're a developed nation. And if you consider what China was able to do with our intellectual property, just imagine what China could do with our financial system and our economy if it was left completely unguarded.
Mm-hmm.
But as far as Trump, I'll jump on that quickly. He has no place to question our founding fathers. And that's where I see this. Again, the chair of the Fed is confirmed by the Senate. There are some Federal Reserve Board governors who required a swing vote on the part of the prior vice president. I find that to be shameful because that resembles more of a political appointee. But as long as a Fed chair has a majority of the senators confirm him or her, then I think that position should be sacrosanct based on the checks and balances that our founding fathers first envisioned.
All right. If I was President Trump and you just said that to me, my argument would be they're too late to the party, right? As Trump indicated in some of his True Social posts yesterday, inflation's down. All these. We'll call it optimistic views of the economy, and therefore the Fed is too late, as he said, and they need to start cutting interest rates. So, is that enough criticism of the Fed to oust the chairman?
No, again, it's not because it's not the president's place. It is the Supreme Court's place to come in and rule on such a move. But out of the other side of my mouth, I will say that saying that the labor market is as strong as it is absolutely specious
Mm-hmm.
and deserves criticism and deserves the criticism of the markets, and that assuming that inflation is going to go up because of tariffs is equally disingenuous, because in the experience of 2018, 2019, we actually saw the CPI decline from one year to the next because there was a much bigger drag, as we're seeing play out in real time. There was a much bigger drag on the economy, on growth, than there was an inflationary impulse on prices.
But why a moment ago? In your theory is one of the most common ones on Wall Street, no matter who you listen to or see on TV, etc. But my I guess my rebuttal back to that is why is everyone thinking that tariffs don't cause inflation and that it's temporary? Because back to your original example, you said, look at and I wholeheartedly agree. The small business owner, he or she is suffering. They just had to go out and spend, money they did not have to pay for goods to come into our country. They had to pay the extra for the tariffs, and frankly, it's now sitting on their shelves in their warehouse or still at the dock, and they don't know if the consumer, is going to pay for that. And so, what my fear is, and correct me if I'm wrong, is we are going to see prices go up, which is going to create inflation. And I don't know if I buy into the argument that tariff caused inflation is temporary, right? That's what the Fed has been telling us. And so can you explain that a little bit clearer?
Well, then the Fed's not looking at its own data on the distress in the household sector, on the
Exactly.
fact that millions of people have not been paying on their student loans. They're
Yep.
now obligated to do so. They're not looking at credit card delinquencies. They're not looking at half of the picture, which is purchasing power.
Right.
You can attempt to push through price increases, and you can definitely have your margin squeezed to kingdom come and all the way to bankruptcy court if you cannot handle the higher input costs. But if you cannot pass them along
Mm-hmm.
to a distressed household sector, to a distressed consumer, there is no inflation to be had. And that's exactly what we're seeing with shelter inflation coming down as quickly as it is.
Okay. Do you think we're going to see empty shelves?
I think that that's a distinct possibility when it comes to the items that are coming into the country that are extremely discretionary in nature. But if you look at what we produce as a nation, you're talking about a very limited amount of fruits and vegetables. Avocados is one
Mm-hmm.
example. There won't be a lot of French wine in the country. There won't be a lot of French lingerie in the country. But in terms of essentials, most of that pricing is within the United States. Discretionary goods that we import from China, like candy, clothing, outdoor goods, electronics, things that have already, by the way, received carve outs, at least temporarily. These types of products that will not be on shelves are in the discretionary realm. And an increasing number of households are saying loud and clear, we can only afford to buy the essentials.
Right.
And we produce a lot of energy. We should not be having any kind of a trade war with Canada, because we import a lot of oil from them that we put through our refineries and send to gasoline stations. If we treat our allies as we should, don't get me wrong, they cannot run us over. And I think that tariffs should be eliminated on both sides completely if they're truly going to be our economic allies. But when it comes to essentials, that's not why we depend on China.
I love it. All right. When we come back from this break, Danielle, I want to move on. You touched on I'll call it the health of the consumer. I want to go a little bit deeper, because obviously our audience is the consumer, and I want to talk a little bit more about the loan delinquencies of student loans. We're seeing a rise in credit card debt, auto loans. Now mortgages are starting to fall behind. Let's discuss the health of the consumer. Our very special guest this afternoon, Danielle DiMartino Booth, CEO and Chief Strategist of QI Research. We'll be right back. Let's turn it over to Greg Neff. He's got news, traffic, and weather. Hey, Greg. Okay. Beautiful. You are so easy to talk to. All right. This is going to be our longest segment. This is going to be 12 minutes. All right. We're running a little behind schedule here, so I'm going to cut this one down to about 10 minutes. Okay. Here we go. 5, 4, 3, 2, 1. Welcome back to the John Sanchez Show on News Talk 780 KOH. Our very special guest this afternoon, Danielle DiMartino Booth, CEO and Chief Strategist of QI Research. Danielle, before we went to break, we started discussing, I'll use your term, the health of the consumer. It sounds like you and I are both very concerned about the health of the consumer. Wages have risen slightly over the last few years. Inflation has been an issue. Obviously, we're not seeing a pullback in interest rates, mortgage rates still north of 7%. And then it's something you mentioned also that I think is not getting enough attention on Wall Street, and that is the roughly 9 million people that now have to start making payments on their student loan debt. Kind of give us your overall view of what you see going on with the consumer, what your data is showing.
Well, the consumer has been on vacation in terms of their obligations, and that went on for far, far, far too long. When the pandemic first hit, a lot of people left. They moved out to the suburbs. They moved out to the exurbs. They had mortgages for the first time. They had auto loans for the first time. They probably paid too much. We're seeing a lot of millennials with regret and beginning to put the homes they bought after the pandemic on the market. But what we're seeing now is that what I call the obligation vacation is ending, and countless Americans are simply shouldering too much debt. And the idea that the student loans in particular would be forever forgiven, it's absolutely, that's not what this country is about. We
Right.
pay our debts
Yes.
as at least not as a country, but we certainly pay our debts as households. And assuming that that's going to be shouldered by the U.S. taxpayer is absolutely wrong. But what we're seeing right now, again, is record numbers of Americans making minimum credit card payments, record car repossessions. And this is really before we start to see the fallout from the student loans having to be paid back. And this is by some of the highest earning households, by the way, who account for a large proportion of consumption because they're the ones who have the largest student loan payments that are now coming due.
So what's your advice to the consumer listening right now, saying they're shaking their head as they're driving down the road or sitting in the office or on the construction site going, boy, Danielle, you're describing me perfectly. What's your advice to that person right now to get through these tough times?
Well, look, this is a time that I say that we all hopefully have family and friends that we can fall back on. The Census Department reported that 17% of home sales in 2024 were to multi-generational households. That might be the reality for a little while because housing prices, and this is where I'm a huge critic of the Fed, housing prices were run up way too much by the Federal Reserve, taking such a huge position in the mortgage-backed securities market, which helped feed speculation in housing. But a lot of people right now, I think, are going to have to batten down the hatches and truly decide what it is that they must have. And again, rely on family, rely on friends, do what you can to budget as best as you can, and maybe do a little bit of introspection in terms of what you think is something that you absolutely have to have and whether or not you absolutely have to need that to exist and to take care of your own loved ones. So these are not easy questions to answer at all, and these are not going to be easy times. And I'm not trying to be insensitive to that. But
It's the
sorry, go
need
ahead.
versus want. It's the need versus want, is what you're saying.
It is a need versus a want. And I think that there's an entire generation who actually believes that there's such thing as a venti latte that's a need,
Right.
which it's not. So,
Good example on that one. Good example on that one.
it's it'd be also helpful if Apple could design a battery that lasted for more than a few generations. Sorry, that was out of turn on my
That's
part.
quite okay.
But we have grown to rely on our devices, and but having to spend $1,000 on one, that may not be how we go.
Right.
Verizon announced its earnings, and it got fewer subscribers than it had hoped to have. That means that people are trading down to other brands that provide the same level of service, but for less money per month.
Let's turn back to the Fed for just a moment. You've said the Fed, again, the credibility is, I'm going to kind of put words in your mouth. The credibility is basically at stake right now. You've got a president that wants to oust, as we said earlier, he wants to oust the chairman. You've got a president that just basically dislikes the Fed and everything about it. What is your dislike with the Fed right now? And a follow-up question, if you could sit down with Jerome Powell right now, what would be your advice to him?
My advice to Jerome Powell would be to be much more forthright with the American public and
Mm,
to say, we are under assault, but we're not going to lie to you anymore. We know that there are layoffs occurring. We're going to stop saying that the labor market is strong.
hmm
And we understand that small companies are really under the gun here with rising input costs. And we're going to recognize that interest rates are prohibitively high, maybe not for the biggest borrowers in the country, um, but certainly for households and for small businesses, borrowing costs are still prohibitively high. Monetary policy is still too tight, and they need to be very forthright in saying it is not because the president is asking us to act, but we are acting because it is the right thing to do in the public interest. But they have to communicate that.
I want to go back to your point you said right at the beginning of this answer, and I love it because I feel the exact same way. And that is, the Fed is not telling us the true picture, in my opinion. And again, you agree with me from the labor front standpoint. Now, we are hearing, we get the initial claims, the continuing claims each and every Thursday, obviously the non-farm payroll numbers. I feel that data has not caught up with what really is going on. And my opinion is when, let's call it April's data, May's data, et cetera, when that starts to come out, I think you and I are going to be right where the data is starting to show the layoffs and all those numbers starting to increase. Do you agree?
I do think that we're going to start to see more of a reflection of the reality on the ground because, and this may sound strange to you, because weekly pay for Uber drivers is falling.
Mm-hmm.
And that tells me that this great big shock absorber for the economy, for the labor market, the gig economy, where nearly 50% of Americans are expected to have a side gig by the end of this year, it tells me that that other labor market, the reason we haven't been seeing initial claims rise is becoming saturated.
Mm-hmm.
And that's why we're seeing a record number of Americans with multiple jobs, and a record number of Americans who are quote unquote self-employed. That may mean I'm fired and I couldn't get another job.
Mm-hmm.
But we're not seeing the full picture in the hard data. But I do think that we will start to see that in the coming months because the layoffs have continued on top of the fact that we've had a reduction in the federal workforce.
And could we not use that same analogy, Danielle, with corporate earnings? I mean, we are, 2 weeks into Q1 earnings numbers, and so far the earnings reports have been decent. I'd say on a scale of 1 to 10, 10 being great. They're probably right now so far what we've seen maybe a 6, maybe a 7 on a good day. Um, could we start to see the earnings per share, the guidance, the forward guidance by Wall Street begin to diminish as we enter into the second quarter?
Yeah, I think guidance is all but going to disappear. You're actually seeing companies report earnings two ways, with or without tariffs.
Right.
But the biggest tell for me this earnings season is the fact that 65%, we're early on, but 65% of the companies have missed on their top line.
Mm-hmm.
And you can do all kinds of things to massage the bottom line and one-time charges. You can't do anything to manipulate revenues.
Right.
And that's where we're seeing companies miss to the extent that they continue to miss their revenue estimates. They will continue cutting costs.
Agree. And usually that cost is labor. Back to
That's
our
right.
All right. Again, I highly recommend you pick up Danielle's incredible daily report. It's called The Daily Feather. You can find it at quillintelligence.com. That's QUILL intelligence.com. All right. We'll come back and wrap up with our very special guest, Danielle DiMartino Booth, CEO and Chief Strategist for QI Research. Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. All right. You good for 2 more minutes?
Yes, sir.
Perfect. All right. Let's come back and I want to wrap up with you as far as your advice to the retail investor right now. 5, 4, 3, 2, 1. Welcome back to the John Sanchez Show on News Talk 780 KOH with our very special guest. I have thoroughly enjoyed this. I hope all of you have also. Danielle DiMartino Booth, CEO and Chief Strategist of QI Research. And once again, that website to subscribe to her incredible daily email, the quillintelligence.com is the website to pick up the report called The Daily Feather, something Jason and I look at each and every day. Danielle, let's wrap things up with really the most important thing, which is what you and I care a lot about and the most about, and that is the retail investor, the mom and pop, the hardworking person out there listening to us going, my God, I can't keep up with all the headlines. Everything is, my costs are going up. I'm not getting raises. The stock market, like you said earlier, up 1,000, down 1,000. What's your advice to the investor right now?
I think my advice is to be as hedged as you're comfortable being. Stocks are still up appreciably from where they were just several years ago. And to the extent that you can be more hedged in your portfolio, the better. The silver lining of the Federal Reserve's higher for longer campaign is that you still get paid quite a bit on your very short-term cash. That's where a lot of the institutional investors have been piling into, and with good reason, because they still get a great return to kind of be on the sidelines. And as far as the holdings that you do have, I realize it sounds like a grandmother speaking to you, but look for companies that are going to have strong dividends that are not going to be cut. At least get some income on your stock holdings to compensate you for the extreme volatility in their share price.
I love that advice. And we like to call that get paid while you wait, right? You and I were taught that growing up in this business, get paid while you wait.
Yep.
And then I think we can add one more thing, and that is, again, something we've been advising our clients and our listeners on, and that is take a look at your portfolio. Do you have holdings in there that are susceptible to tariff fluctuations, tariff risk? I love your idea of looking at the utilities, looking at, high dividend paying stocks and ETFs and that type of thing. Again, one great way to hedge and insulate yourself against this extreme market volatility until things begin to calm down. Danielle, I can't tell you enough how much I have enjoyed our conversation today. You do incredible work for this country, for this world, again, being so highly respected in your industry and for what you do. So, again, from all of us, we wish you tremendous success. We hope to have you back on the show very soon. And thank you again for all your hard work and your team's hard work at QI Research. It's been a great honor to be with you.
Thank you so much. Thank you so much for having me. Take
My
care.
pleasure.